To remain updated with the latest business news, click on the bell icon.
Very warm welcome to you, Madan Sabnavis, on the Business Today show. I want to begin by asking you about the summary of what the RBI has done. They have left rates unchanged. They have maintained an accommodative stance. Why has this been done by the RBI?
Yeah, I think the major reason for this is that there is a bit of uncertainty about the state of the economy. I think that's something which the RBI governor has mentioned, that the accommodative stance is based on the fact that even though growth seems to be looking up, it doesn't look to be very durable at this particular point of time. And I think the allusion out here is more towards this new strain of virus, which could possibly lead to certain actions from the point of view of the government, which could slow down the growth process. So I think when we don't have certainty about growth, I think that's what leads to this kind of a stance being taken by the RBI.
Madan, why would the RBI not be completely certain about the growth trajectory? Because Omicron is just a recent development, perhaps of the last 2 weeks, and we still don't know how it will play out. However, the growth impetus that we have seen build up over the last quarter is pretty robust in some ways. How much has Omicron weighed in on the policy committee's thinking?
No, I think it's this way that Omicron has been the clinching factor because this has started maybe 2 or 3 weeks earlier. So this has become the clinching factor. But I think we're all aware of the fact that notwithstanding the fact that we have a very impressive GDP growth number, it comes over a very low base. So in fact, we could say that even in case we go by the government of India's estimate that GDP will be growing by a double-digit number, if I talk of 10.5% for this particular year, if I compare it with the pre-pandemic times of 1920, I would end up with growth of something in the region of around 1.5 to 2%. So I think being cognizant of the fact that while growth has definitely looked steady even before Omicron came in, it definitely doesn't seem to be of the durable variety where we can be assured that things are going to accelerate from now onwards. And I think here again, I think the RBI has mentioned, the governor did mention, that investment on the private sector side has been sluggish. And while everybody is hoping that it will pick up, I think as of today, I don't think there are too much of signs of private sector investment picking up on an India-wide or all industry basis.
Madan, one of the things that I want you to explain to our viewers is the future interest rate scenario. We are seeing a situation where the rate at which the central bank lends and the rate at which it takes money from the banks, there's a pretty wide gap. For the common average saver, what is likely to happen to their fixed deposit interest rates, to their savings rates, also given the inflation expectations that we have?
Traditionally, the Monetary Policy Committee was supposed to be looking at inflation, and in case they felt that inflation was going up, there was very strong reason for the repo rate to be increased. The repo rate is the anchor rate because if the repo rate goes up or down, immediately banks are supposed to respond by increasing or decreasing the deposit rates, and accordingly it feeds into your lending rates. But ever since we had the pandemic last year, I think the RBI made it very clear that while the MPC would be normally following what was the dictate which was given to it, that's target inflation, growth was the overriding concern. So given the fact that today we're saying that the RBI is still not sure or not very confident that growth is going to be durable, it means that the repo rate is not going to be changed. And even the fact that you're going by an accommodative monetary policy, the indication is, the RBI has defined an accommodative stance as being one, not just one where liquidity is being provided, but also one where the interest rates will not be increased. So today as a household, what are we to expect from interest rates? I think the banks are not going to increase or decrease the interest rates at this particular point of time. So if you were a borrower and you were hoping to get loans at a lower rate, that is definitely not going to happen. Ideally, your deposit rates should be increasing because inflation appears to be in the region of around 5.3% is what the RBI is talking about for this particular year. So ideally, we should see deposit rates going up. But until the repo rate is increased, we may not expect the deposit banks to increase the deposit rates. And even today, if you talk to bankers, I think they will say that there is surplus liquidity. We don't really want more deposits. So if they increase interest rates, there's a fear that deposits will increase and they will not know what to do with it, because if you pay, say, 5% on a deposit and you're going to invest it in a reverse repo at 3.35%, or even if I go in for a longer duration, I may get maybe 3.5, 3.6, 3.7%. This is not an optimal situation for bankers. So as deposit holders, I don't think we're right now looking at deposit rates going up. We may have to wait for the February policy to see how growth and how inflation pans out before a call is taken by the RBI on the repo rate.
Quick aside on this, given the low rate scenario for savers, do you think that people heading towards the stock markets is likely to continue as a trend, although we are seeing some sanity on the IPO front, Madan?
No, Siddharth, I think even I'm not too worried about the equity market as much as I'm worried about cryptocurrency. Because today, if you're looking at it, the households feel that, look, they're getting something like 5% return on a bank deposit. Small savings is very much a little higher, but there are certain limits if you're talking of things like PPF. And besides, people are not too familiar with it. There has been a tendency to go into the equity market. So it's going both through the mutual fund route, it's going directly into equities. And some of the braver people are actually also chancing their luck in terms of cryptocurrencies. From what I've heard, what's been reported, some of the exchanges have said that there could be something like 6 lakh crores, which is residing in investments in cryptocurrency. So I think that's the major fear which is there. And I think the government as well as the regulators are aware of the fact that there is a bit of desperation on the part of households, because with inflation running at 5%, and even this 5% is more of a numerical number for us, typical households feel that rates of all the commodities have gone up by close to double-digit numbers. So given this kind of a scenario, I think there will be a temptation for people to move from debt to equity and cryptos, which could be a major problem for the economy going ahead, especially since when we go to cryptos, we are actually moving out of financial savings and going into into totally unknown territory.
Absolutely, and crypto is a sector where those who are investing are being extremely brave, like you said. And the flip side is there's practically no KYC and there's no need of even a demat account. So let's leave that aside for a moment. I want to pick up the issue of inflation a little bit further. Anecdotally, across the consumption spectrum, we are seeing prices go up. Practically everything that all of us consume. Much of that comes out in the numbers, but because of the way the basket is constructed, all that price rise is not translating. How significant is it an issue as far as our growth is concerned? Is this something that is worrying you personally?
Definitely it is, because we're looking at inflation, as you said, the 5.5% number may be understating it, and we may actually be paying higher prices and spending more of our income on more of the necessities because of the composition of the CPI which we're talking of. But this definitely does affect everyone, because we are talking of a CPI which normally covers all the necessities, the basic goods which every household consumes. And as you keep spending more on these commodities, automatically there is a tendency for less to be left for discretionary consumption, as well as for savings. So I think that is a concern for future growth, because if I don't save, there'll be a problem in terms of overall savings leading to higher investment or lower investment, higher current account deficit. I think leads to other kind of complications for an economy. So ideally, we should be having higher savings. And the second part is also in terms of discretionary consumption. We know very well that if I consume more, we cannot consume more of soap and toothpaste. We need to be getting into the auto sector. We need to be buying some consumer durable goods, which will be reinvigorating investment. So that kind of a virtuous cycle is definitely not something on the horizon, primarily on account of the fact that jobs are not being created in the right numbers, incomes are not increasing. To top it all, your real income, disposable income is getting affected on account of higher inflation.
So how would you, in summary, describe the economic situation? We are practically at the end of calendar 2021 as we head into 2022. What kind of economic scenario would the average Indian look forward to?
Yeah, if you look at the average situation today, one can say that the worst appears to be behind us. When I say worst, it's in case of impediments being placed by the government on account of various kinds of lockdowns. So I think that's something which is behind us. And while numerically growth appears to be buoyant, but definitely I don't think there's too much of conviction in it in terms of more jobs being created and more income being generated, which can be spent. So as of now, we are probably just about at the base camp, I would say, and there's a long distance to be traversed. And a lot will depend upon how the conditions evolve in terms of the virus, in terms of government action, and in terms of the economic growth. So I think that's something which is behind us. And the second part is also in terms of discretionary consumption. We know very well that if I consume more, we cannot consume more of soap and toothpaste. We need to be getting into the auto sector. We need to be buying some consumer durable goods, which will be reinvigorating investment. So that kind of a virtuous cycle is definitely not something on the horizon, primarily on account of the fact that jobs are not being created in the right numbers, incomes are not increasing. To top it all, your real income, disposable income is getting affected on account of higher inflation. from the point of view of the government, I think the policy action has been very positive and proactive right since the time we had the pandemic last year. But all this needs to get to materialize into concrete investment, which creates jobs and accordingly leads to increase in consumption. And the only worry right now, of course, is inflation, because while we have been ignoring it from the point of view of monetary policy, it definitely is something which is coming in the way of discretionary consumption. And that's a worry for every individual in the country.
Absolutely. And Madan, we perhaps will witness one of the biggest exercises that happens once every financial year, which is the general budget in roughly 6 weeks from now, which could provide some of the necessary inputs for job creation and overall expansion as far as our economy is concerned. Madan Sabnavis, as always, thank you very much for your time with us here today. With that, it's a wrap on this conversation.
If you like the video, do like, comment, share and subscribe.